boys, let's begin. A little bit of bark, just giving you some culture. First of all, lots changed in the last 24 hours. Sentiment's definitely darkened. You got a little bit of sideways action on Monday, and this has turned into a little bit of risk off on Tuesday. I mean, there's a few reasons, and we'll go over what's developing. But basically, in this scenario, when everything's had quite a big run up, you gotta be very careful here that you don't get caught buying the dip in some of your favorite trades. So, say buying the Aussie was one of my favorite trades for the last couple of weeks. It's definitely turned negative, right? So, in regards to that, I took a small loss on the Aussie today, mainly as it just could not hold this 76, and then we got a little bit of data out that was suggesting the RBNZ was going to announce some new rules for housing, and this sort of just added to the bearishness that was been developing in the Kiwi cross, and it finally overflew onto the Aussie that if they're going to cut rates in RBNZ, really they're probably going to cut rates here in Australia too. It is coming up. It is a little bit far away. We were suggesting we're going to sell maybe Friday and Monday to try and play the same sort of game they played for the Kiwi. But we've jumped ahead and looks like the market's selling a little early. All right, so this is definitely catching a fair few traders off guard. But it is providing a few opportunities. There was that really nice trade, definitely nice in hindsight, given by Deutsche Bank last night, which was the long Euro Aussie trade. All right, the main reason for this trade is that the ECB will disappoint, and that at some point the RBA will, the market will focus on the RBA and the likelihood of them cutting rates, and this is going to put downward pressure on the Aussie, and it's sort of been immune to selling pressure, but definitely it's not immune at the moment. Added to the stock market sell-off, it's just a brutal combination here. So this has got a lot of upside potential. We were long yesterday with the Deutsche Bank boys at 145. Took a profit this morning. I mean, probably shouldn't have. And then hopped back in once it looked like the Aussie was breaking. All right, so Aussie's definitely broken some key supports here. There'll be a lot of interest to sell in rallies, and a lot of people stuck long. And so it is. I mean, it may be brutal. It may be just like the Kiwi. Yeah. So we issued a little sell order in the Kiwi this morning as well, to on the back of that data. I mean, the market reaction was a little bit staggered to what they were doing from the RBNZ, but it was pretty easy to tell what they were trying to infer. So there was a little bit of time. That was an initial reaction, and then it's like, well, okay, what to do here? Sell at the support. If we break that, we've got some significant downside. And now it looks like we break 70. We've got that open up to 68, and it's unlikely, right? The market's going to give a reprieve here to traders going long, because it's just it's a story that doesn't end until the RBNZ, and that's still a month away, and the market's sort of caught wrong-footed, so there's a lot of stops to eat, and if you've traded the Kiwi at all, it's pretty brutal. It's pretty relentless when it sells off. So if you're expecting that maybe that fall from 73 to 70 is enough, be very cautious here. Yeah. Buying it, you could get into a lot of trouble. I'm targeting 68. 68.30. Alright, so the Aussie is being dragged down by that sentiment. Now the chances of the RBA cutting in August are increasing. We don't know for sure until we get to the the data on next Wednesday, right, from the Australian CPI. But if the market's already done damage technically to it, and that data comes in weak confirming it, it can really start to produce that serious movement. And remember, in April, it did fall 600 points on the combination of the RBA cutting and the weak CPI. Weak CPI, RBA cutting. So end of the day, that's what 700 point fall. You can definitely get 300 or 400 points down to those Brexit lows if it does develop into that sort of selling off frenzy. Remember, the Aussie goes down much quicker than it goes up. So it's while I've been suggesting buying on dips, I will be really hesitant until we get much lower. And that CPI number is a little bit up for grabs now. I mean, it does make sense, right? That if it's weak in New Zealand, and New Zealand's basically a state of Australia, that you have that weak number coming through in Australia as well. So this is the DAX. You can see there's a bit of weakness coming through. There is temptation to buy, right? But I'm hands off on this one, because when it does move and it does these counter-trend type of trades, it can go easily 200 or 300 points. So I'm interested down towards 9,700. It may take a couple of days to get down there. So far, the US has not come with the rest of the market. Yeah, but it definitely can. So pull back towards that previous breakout point. The sort of the all-time highs was around about 83.50. So if we pull back to that, that's 150 points. DAX moves a little bit quicker, even though it's a smaller domination. So 9,700 underneath 9,800. So I mean, look, it's natural to have these pullbacks even in a really strong uptrend. So it so far is not manifesting itself in any way at all with the dollar yen as well. So the two pairs which are sort of holding off here are the dollar yen and the Dow Jones. But if they're the last two to break, then you got significant downside here. Pull back towards below 105 is definitely on the cards. If stocks selling, accelerates, there is a chance, obviously, that the market just rebounds up and just continue the buying. But this is not the sort of dip that I like to buy. I like to buy on the markets in the rally mode, initial rally mode. I don't like to buy the dip after the market consolidates. So we're getting consolidation here. After the huge rally, we're getting consolidation here. After the huge rally, you don't want to buy that dip. That's a dangerous dip to buy. Initially, you want to get a lot more. I mean, what I want to see is it bounce off and get, as it's coming up, I can buy it. I don't want to buy straight at the bottom. If you can avoid that, then you save yourself a lot of heartaches, because those are the ones which really will catch you on the wrong side, and then you'll be caught long. Still pretty much all-time highs, and the market's broken back down, and it could end up being like a false new high. On the monthly, on the weeklies and such. So it'll be like, oh, why'd you buy up there? Yeah, so it's easy when it's easy, but it gets the market's been a bit too easy lately. Alright, so we're selling Kiwi, we're buying Euro Aussie. We're definitely still long Aussie Kiwi, because, I mean, it's straight up, the Aussie sell-off's just in sympathy with the Kiwi. So it's, it's not the main driver, but it's getting dragged down into the same game. But this one definitely has potential to keep on going higher. Yeah, so, the Aussie's being dragged into it, but it's not a full participant in it because we haven't had our CPI numbers yet. New Zealand's got their CPI numbers, they've got their new macroprudential measures from the bank, and also Kiwi on Thursday has got this special update, in between market rate announcement update. Right? Why are you doing that unless you're going to say something bearish? So that's the way we're playing it here. Obviously, we've still got the long dollar yen from way back. We're just going to keep that probably for a long time. And the pound Swiss and dollar Swiss are not doing well because they're safe havens. Yeah, Swiss is a safe haven. I mean, pound Swiss is not doing too badly. I'm not too concerned about it. If we do break that 129 level, though, I will be considering closing, depending on how bearish the market mood has turned. Oil is in play as well. A little bit weak. Iron ore's a little bit weak. So the Canadian dollar is under pressure. Alright, so when oil's under selling pressure, you do get Canadian dollar coming in selling pressure. But, I mean, it's immune to the CPI, RBA, RBNZ thing, so it's not the same game. It is more just a straight up oil and stock market game. But you've got to be on your toes here because it's got a lot of potential to go to the top side here as well. Same as the Aussie, to the downside. You've got to switch really quickly with the Aussie. You can be ultra bearish, ultra bullish, just generally as the market's found support for, since back in the day. But when you sense something has changed, when you sense that the selling is a little bit more aggressive than usual, when there's no real news and the market's selling off, then you got to be on attention that there could be one of those sharp selling events coming. And you know, if you traded Aussie for more than a couple of years, you know what I'm talking about there. I mean, it's not as relentless as this Kiwi, but it can get pretty bad. Data-wise, from the UK, we did have a little bit of data out. Not exactly going to shake the world, though, because it doesn't really factor in too much of the post-Brexit action. German Zoe just came out. Dramatically weak. Interesting. Alright. Euro doesn't seem to mind. I mean, the Zoe hasn't really been a big mover for a while now. It's probably just reaction straight up to the Brexit vote, yeah. So, I mean, this could be taken by uncertainty and a few things, but yeah, look, we'll see if that continues to be the case next month. But yeah, that's -6. There's always expected to fall, but that's pretty full. So that's not going to help the stock market rally, though, yeah. This sell-off can have gain legs. I mean, it's just not enough movement really on the DAX here. It's just generally move 200 or 300 points before it gives up on the downside. Let's see. Have a little look at in the room. Let's see what's going on, boys. It's everyone's looking at a bit of pound yen, huh? I mean, yeah. In that scenario, you don't want the sell-off to get aggressive because that will drag down the dollar yen at some point. But dollar yen's doing a good job holding up at the moment. Pound is pretty good, you know, well placed here. It's not the Aussie or the Kiwi. So yeah, as long as the pound doesn't go back below that 131, you know, 30ish area, dollar yen can hold above 105, then yeah, pound yen's not a bad little buy on the dip. I'm not getting involved here though, yeah. I'm not a sadistic bastard. It really could turn here. I mean, the US session, right? It's basically the Asian session said, yeah, we're weak. European session said we're weak, and then it goes over to US session. It's like, what are you guys gonna do? You gonna continue this monster rally by yourselves, or you know what I mean? Well, what's the plan here, boys? And you know, I'll be sleeping tonight, so I won't see it, but wouldn't surprise me if they sell off, right? You know, markets sometimes just need a reason to sell off, and it's sort of getting one. It's overbought, it's gone sideways. Just test for support. I mean, it's just going down testing for support. Just see where it is. It's not that crazy an idea. It's not really saying we've changed our full view. It's just profit taking leading into pullbacks, and being patient on that pullback, on this particular pullback, because it's after the market stalled. So the pullback can be a little bit bigger than the pullback when the market's rallying. Yeah, consolidation pullback. Trying to make it so you can understand what I'm saying. So when the market's just gradually grinding higher, then the pullback is a little bit smaller than when the market consolidates and then has a pullback. That way, it really does usually pull back to a bigger support. You know, if we're talking Fibonacci's, we're talking like the 68%, and that can be quite a sharp sell-off, and it usually doesn't have much of a reason. Alright, so then after that sell-off and a fine support at those levels, then we can hop back in. It's just, you know, you got to wait for that market to finish. So I'm in no hurry. I do think probably Euro Aussie and Kiwi are going to continue low though. Just too many stops will be underneath 70, right? And the market be just want to eat those. If you're long, like there's a game you can play a little bit when you're trading. It's like, who's more worried now, the long Kiwis or the short Kiwis? And it's definitely the long Kiwis. You know, the long Kiwis are scared. Same with the Aussies. And so, you know, that not 9 times out of 10, 8 times out of 10, the scared party is going to get stopped out. Aussie at these levels, yeah. I mean, significant slick. You're asking about Aussie on the downside. I mean, there's going to be some buyers, right? But I don't think they've got the memo. So I don't think these buyers have got the memo that the market is turned. So they might be technical buyers, or they didn't, they don't understand that dynamic that's coming through, and the reason why there's so heavy selling coming through. This is not just straight up, oh, we'll have a sell-off, right? This is straight up the market positioning itself for that weak CPI number. And the smart money tries to position early as possible. And then let the news take the market that next leg lower, and then they're taking profit, at those big supports like 73. But they've already shorted at 76, so, or on this break earlier. So yeah, I would be surprised if this held. Very surprised. Then you're looking at the low 74s. So yeah, it's all. I mean, look, it's a little bit to do with if the US stock can remain resilient, then the Aussie can remain resilient. But it's getting more and more pressure on the US stock market, right? That has to hold the whole world up. Nikkei is, doing its best as well, but the Nikkei is all full of hot air rather than reality. So yeah, I wouldn't be buying this unless I'm scalping it, and if I'm scalping it, I'm, worried about 75.40 should cap on the top side. This is the sort of day that if you're a bull like me, you sit out. You sit out and watch. Yeah? You just sit out and watch, or do some tactical shorts. I mean, bullish on the whole markets, like risk on. I think it's going to continue most of the year. And we're probably going to give up some pips if the market holds. Yeah, if the Dow Jones holds, we're probably going to give up some pips here on the resumption, because it's going to take a fair bit for me to get now bullish back on the Kiwi or bullish back on the Aussie. It would take basically the RBA to surprise the market and not cut rates. Or to be surprisingly strong CPI, which is just, it's hard to see that happening. So, what I alluded to earlier in the Euro-Aussie trade was that the ECB is likely to disappoint. It's actually not an uncommon theory out there. A lot of banks are putting out the same sort of ideas. A lot of traders I speak to are thinking the same sort of thing. So, I'm very surprised in not getting a little bit of a front-run rally here on the Euro. It's only 2 days away now, so I'm not sure why they're hesitant. I don't trade Euro, so don't ask me why I'm not buying. But I don't trade Euro straight. But it's surprising that we haven't started to rally in anticipation of no ECB action. Sort of, I mean, it's a double-fold effect. It actually forces Draghi to do something if the market's rallying into it, and it sort of makes sense to trade. So the fact it's not happening right now, and if it doesn't start to happen tomorrow, then I'll have to rethink the whole premise, yeah? Perhaps the US dollar is just... perhaps it's just getting ignored by the market because it's not moving enough. Obviously, you got to have movement, you got to have break of range to get the computers buying. To get the attention of traders, you got to have movement too, right? So people maybe just not watching it, just waiting. So this actually leads to the chance where if it does break, it's relatively compressed range here that you will get that bigger movement as it finally breaks one way or the other. But yeah, so Thursday will be interesting. So there's a couple guys asking, yeah, about the said DAX. I mean, is extremely cheap in my mind, right? No way that DAX should not be a lot higher given what the Dow's done, but yeah, you know, it's you can't fight the market. The market's right, yeah. When you start to see that normalization, you've seen the Nikkei catch up, you've seen the Dow Jones lead. Now you've got the DAX still underperforming a few hundred points. Perhaps we still got to clarify a few things over in the eurozone. Perhaps there is that still the whole Deutsche Bank problem. There's still the whole bank lending problem. Maybe they're just a little bit hesitant on the European stocks because of that. Yeah, but it is it's definitely noticeable. Yeah, to when you're looking at all the global markets, you're like, well, that one's underperformed. Similar to the Australian stocks, right? But the Australian stocks got the reason commodities are so weak that our biggest heavyweight members are just not making money, and the banks can't get even more better valuation than they are now because our banks are basically huge in our weighting of the ASX. So top 4 banks I think handle like 25% of the index, and they're already pretty high because they had this huge. We've had 20 years here in Australia without a recession, so banks have obviously done well. Haven't had the big defaults yet. All right, so yeah, we'll probably have a little bit of research there now. I will have a look at some of these trades though that are in the market, that in the trade room at Forex Signals. We got a short from Achit Chan Badira. Okay, well that goes against everything I was just talking about. I can't really go ahead and do that one. What is this? This is not even a chart, mate. This is not really what it's about, yeah? If you could post a chart next time, that would be great. If you could post a trade which is going the same direction as my update as well, that'd be great. Just joking. Just joking. Just joking. You can trade whatever you want. Yeah, I don't know if you're taking into account the ECB, yeah, in this whole scenario. This is just technical, yeah? And even then the technicals on I mean, I don't know how the technicals work when the market's not moving, so... yeah, I'm not going to do that trade. Usually I do the trade though, Ajit. I won't do that one. Dollar CAD by Magician does make sense. It's got a lot of room to move. If oil was to break 45, 44, it's got a lot of room to move. It's gearing up, right? It's still relatively holding its own. So yeah, dollar CAD I do agree with. I'm not going to be awake during the US session, so I can't trade it because I don't have access to the oil prices. But if I was a US trader, I'd be looking at this pair very closely at the moment. Slick is short oil. Alright, I love that trade. I'm not sure even what the contract is on this particular account though, mate. So let's have a little look. We'll give you a trade. And you got your stop where... Okay, we need to stop. Need to stop. I'm going to put my stop above 47. I'm going to put my take profit. Let's be ambitious, yeah? Let's be ambitious. Alright, so that's short oil. I don't mind the trade, I like that trade. It's like long Aussie dollar by Rabbit. He needs his head checked. That's a mad trade. Yeah, but he's been stopped out already. Short Kiwi by Tony D. It's a beautiful trade. No. That was my trade 12 hours ago. When I just got into work, we saw that. that news pop up on the Reuters machine. It's like, wow, well, this is a pretty easy sell. Aussie CAD by Jay and Alice. Alright, so I haven't watched many of Jay's streams because he's streaming the same time I'm working, and I can't really sit there watching a stream while I'm working. Let's have a little look at it. Okay, it's been stopped out already. Yeah, so he probably was playing that little break on the top side there. He didn't. Yeah, but this is when the Aussie broke down. So this one's been stopped out. All right, so we won't go any longer because it's starting to get a bit more than 20. Near 16 hours now on these trades. So a lot's changed. I mean, it caught a lot of the market off guard, that Aussie pullback. You could sense something was wrong though. I mean, this is not the usual sort of price action after a dip. You usually get a bigger rally. So I was a bit concerned even when we, in that morning there when it failed and again at 76. It's like, well, okay, maybe you got something else planned here. So sometimes you got to listen to your gut, yeah. If that's not the normal sort of price action after a dip, the sideways action but failing, then yeah, just cut your trade, early. Now I'm thinking about where to buy Aussie Kiwi more of it. So this will rally if Kiwi breaks 70, yeah. It's just I want to be long more before the OCR on Thursday. So at some point in the next 2 days I'm going to be buying more. Just got to see the right sort of action there. Nothing wrong really with this level. Probably a little bit lower though. Just see if this level holds, I'll probably be adding on a little rebound here. Just you want to buy when you see a little bit of strength there. Most of the time, you give up a bit of pips, but you get more certainty in your trade. Dolly's just relentless. All right, well, let's have a look at the market news then. One of the traders posted this. It's true. It's probably looking weak now. Let's see if it's broken that level though. No, it hasn't yet. So it's still holding on to the, Aussie Kiwi is one of the ones you favoured to buy as well when the market, if we do get a sell-off in the Aussie, and the stock market has a correction a little bit, then you're looking to buy Aussie yen there. It's one of the better ways to buy the Aussie. Whenever you're looking to buy the Aussie, have a look at Aussie yen. Yeah, but at the moment that looks a little bit still holding, but tentatively, yeah. A little bit of oil news. See if there's anything important there. Turn off the camera. I mean, I would hate to be an oil trader. There's so many things to track, and there's so much dodgy news, and there's so many countries that produce oil that you have to keep your finger on the pulse. I mean, I just like the general theme of having oversupply or undersupply, yeah, but that doesn't seem to matter when the market starts its huge moves. Hopefully you're right on this one, Slick. I'll give you 3 strikes, just like if you get stopped out on this one. Get your stop above 70.47. All right, let's have a look at some technicals. I am interested to see the Kiwi technicals actually. So Australian dollar's got a fair bit of room here. Yeah, look. I don't know, let's see how it develops tomorrow. Yeah, I mean, there are reasons to still remain buoyant on it. I mean, but if I was going to sell later in the week, I really can't be looking to do a counter trend buy just for fun. That's how I get in trouble. Yeah, that's how I get in trouble. Just remain short until proven otherwise. I think is the easier way to play the game. I mean, the Kiwi will let you know when it's turning. That's pretty easy level to target down here, lower 68s. Yeah, so because the Canadian dollar rallied so much with oil's rebound, it does have a fair bit more room than the Australian and the Kiwi on the top side there. So really another sell-off in oil or just sentiment changes a little bit here on the commodity currencies. And yeah, if we do break that 131-ish level, or wherever that level is, just say 131.35, 131.50, you could easily see it going back to 135. So yeah, that's why we remain cautious on that. It's the rally side of it requires stock markets to take another 5% higher, and for oil to go back above 50, which is possible, but I don't think it's the main case right now. So if the main case is not that, then I think over time we might just start to edge higher here, and then we get that break above 131, and then all of a sudden the technicals change as well. But this this little triangle here is probably going to break out soon, right? It's amazing how bearish you can become in one day. I was not anything like this yesterday. But a game is not about being right; it's about making money. So just being really adaptable is really important, right? Sometimes it can sound like you're hedging your bets. If this happens, then I'll do this. If this happens, I'll do that. All right, but literally, that's what the case is. No one knows what's about to unfold. The market's evolving rather than a predestined path, right? That you can sort of predict with any sort of real sense of knowledge of what's going to happen. No one saw the FTSE going to record highs, not record highs, but year highs after the Brexit a week later. No one saw that. Or no one I know of. So yeah, I mean, yeah, I don't want to sound like I flip-flopped on the Aussie too much, but yeah. I turned from a bull to a bear in 24 hours. What can I say? Shoot me. Had a big discussion with a few clients about Euro Yen today. It makes sense that it's got a lot of room to move on the top side here. People forget that, basically it's the third largest pair in the market. And if dollar yen's going higher and the Euro ECB doesn't deliver here, then the Euro Yen probably going to lead the dollar yen on the rally. And you've got substantial top side. I love pairs where you can see substantial moves. I'm not just talking to 120, I'm talking to 130. So, that's the sort of pair I'd like to be long in. Obviously, pound yen is similar scenario, but pound yen is much more dangerous. The market getting to the point where it is with the BOJ, so the market getting to the point with the ECB where they suggest there's no more can be done, that sort of puts a floor under the market, puts a floor under the euro. And if they turn on the central bank of the ECB saying they're not going to do any more and that the US is not going to do any more for a long time, and people start to not believe then that the US is not going to raise rates, and that's a scenario where the Euro USD rallies to 120. All right, so there is ways in which this has a huge rally for the rest of the year. And the Fed, I don't think anyone... I don't know about trust the Fed, but they're really quite dovish, right? They're really... any excuse and they take it not to raise rates. And it doesn't really seem to matter how strong the NFP is. It's not really changing the tune in the bond market. So it's more of a bond market change. If the 10 years in the US start to fall, and they've been, remember the rest of the world has 0% 10-year bonds. If the 10 years, which have been on this huge downward, the yields in the US and the 10 years have been this huge downward trend, right? Been finding support around 160, 150. If they break lower and the 10 years go down to, say, near 1, in that scenario, the euro is at 120 plus. It's just basically the market gives up on the Fed having a normal rate hiking cycle. So instead of us going back to 3 or 4%, we're just going back to 1%, maybe, one and done, over 3 or 4 years. That's crazy stuff. So the bond market's a big one to watch here, and it's not really my trade idea. It's more a few of the bond traders are talking about it, that there will be capitulation in the US 10-year yield, that the market will lose patience with the Fed normalizing rates. And if that happens, then you get that big sell-off in the US dollar. Whether that would hurt dollar yen, that's up to grabs, right? But it should. But also, at that point, probably Japan's doing whatever it can to support its currency, yeah? So there's no doubt about it. Japan loves this rally. Abe and Kuroda are having drinks parties every night. The market's making new highs. Because they haven't done anything yet. They haven't done anything and the market's rallied 600 points. They're probably thinking this is easy. But I don't know if you guys remember what happened last time that the BOJ did something big. The market rallied a couple hundred points for a couple hours and then fell 1,000 points in 2 days. Well, maybe not 1,000 points, that's a bit dramatic. But 600 points, 700 points. Alright, Ajit, you're asking about how it works out here. When you log in, you'll come into the chat site, mate. This will be your main thing. So your same name is on the forums. Your same name's and the stream is whoever's streaming at the time. So there's 3 or 4 streamers streaming at different times. There's an American streamer coming on a little bit later, and streaming during the Asian session as well. So this is I do the 9 GMT most days. I'm actually thinking about doing a couple of 7 GMTs, so the exact start of the open of the DAX. Just trading the DAX there, because it is it's a good time to teach. When the DAX opens, you can sort of start to play that game. I'll turn you all into DAX traders. You might thank me later or kill me. DAX is, if we're talking about what DAX is, it's like the pound yen of Forex. The DAX is that to the equity markets. It moves every day 100 points without fail. While the ECB event's coming up, we're going to take a breather here on the euro pound. We have been selling it, but if the euro is going to rally, I don't want to be involved in that. So the the pound Swiss trade we're in may take a little bit of time to develop. It's not doing too badly. It's just we may even have to cut this and then look to buy a little bit lower. Yesterday we're talking when the market was here, it looked a lot better. This is looking pretty dicey. It's basically the safe haven buying of the Swiss franc from the stock market falling. Alright, so this is RBS's little ECB preview. We'll just go over that, finish up with that today. Unless there's some questions there you want me to go over, particular. You know who we should get into this to have a little interview is Jenny. Jenny and Good Boy Nick. I want to have a little chat with them about their trading styles. Jenny, I'm more interested than Good Boy. Good Boy, I can see what he is. It's much more just a sort of mean reversion trading. So the market very often goes back to certain levels after it moves. You can just use basically like the 5 minute, 1 hour Bollinger Band type trading. But he's very good at it. So he's got very good entries. He's obviously not taking every one. Jenny's style of swing trading, medium term swing trading, that's very interesting. And it's obviously for her it's very profitable. So it's something I would love to be able to trade longer term. Those pound yen, those pound kiwis, those euro Aussies, those euro kiwis, those big moving pairs are the bread and butter of her and her husband. So I really would like to see that a little bit more detail. Obviously, they're probably not going to give away the keys to the kingdom, but just some sort of broad outline of how they approach the market, because I think it's a correct way to approach the market from a technical, because they're very technical, and it's the best technical system I've seen for a while. That swing trading system. So I mean, it's very hard for the pound kiwi not to show which direction it's going because it moves so quickly. But I don't trade it for. I've never traded it successfully over the long term so I just avoided it. It's like trading the two hardest pairs at once. So these guys are of the opinion they're going to wait and see, but leave the door open for something big in September. But BOE is on notice by the market to do something. It could become the summer of disillusionment with the central banks, the second half of this year. everyone's expecting a lot from the BOE, RBA, RBNZ, ECB, BOJ, of course. Everyone expects something huge. And then, you know, the Fed, if the data's good, they have to react, right? They have to. Alright, it's a bit wordy. A little bit wordy. We'll just leave that there. Let's think that most of the action, which is like an extra little cut in the interest rate and expansion of the asset purchase program, will come in September. Alright guys, have a good night. I'll be back tomorrow. If you want me to look at any pairs, it'll be interesting to see how the markets develop in the next 24 hours. It could be the stage where we're looking to buy the dip on the DAX. So you know, hopefully we do get that extra leg of sell-off, and that we can get some nice levels there. To recap, we're just talking about buying it below 98.